Okay, let me ask you something straight up. What's your single most valuable asset? No, really, take a second. Think about it. You got something in mind?
Whatever just popped into your head, I'm gonna bet it's not what we're about to dive into today. Because your most valuable asset, the one with the craziest potential for compound growth, it's not hiding in your 401k. It's not in your stock portfolio.
So, what is it then? Well, we're talking about your portfolio of people. And yeah, this is a total mind shift. It's about stop seeing your network as just, a list of contacts on LinkedIn, and starting to see it as your most critical investment. An investment you have to manage, diversify, and grow on purpose. And listen, the stakes here are huge. I mean, just think about it. This web of relationships you have, it literally dictates something like 80% of your opportunities, your best ideas, and even your ability to get back up when you get knocked down. And yet, for most of us, it's a complete blind spot. We just let it happen by accident.
Okay, so how do we fix this? Well, it all starts by admitting something. The old way of thinking about networking is just broken. It's time to move on. We've got to shift from being purely transactional to being truly transformational.
This really lays it all out, right? On one side, you've got that old school transactional networking. You know the vibe. It's all about collecting contacts, handing out business cards, and that constant nagging question, what can you do for me, like right now? It's a total zero-sum game. But on the other side, that's ecosystem building, and that's a whole different ballgame. It's long-term, it's strategic, it's about planting seeds and making real investments in people, knowing that the payoff will compound down the road. Which means we need a totally new metric for success. Forget about keeping score or counting favors. We need to be thinking about relationship ROI. And no, I'm not talking about money here. This ROI is all about the exchange of these high-value, non-financial assets, the kind that can seriously grow exponentially over time. So what are these assets exactly? Well, first up is knowledge, and I mean the real stuff, the unfiltered insights you just can't find on Google. Then there's psychological support. This is huge. It's that resilience, that clarity you get from people who've got your back when things get tough. And finally, opportunity. We're talking about access to those hidden roles, those key introductions that can literally change the entire course of your career.
All right, so if we're going to treat this like a real portfolio, we need the right tools, right? And the very first step is to map out what you're actually holding. To do that, we're going to borrow a tool from the startup world and call it a social cap table.
So you know how a startup has a cap table to track who owns what? Well, a social cap table does the same thing but for your relationships. It helps you map out who holds which kind of capital in your professional life, and its most important job, by far, is to shine a big bright light on where your portfolio is weak to show you the gaps.
Let's make this real with a quick story. Meet Sarah. She's a super successful product leader, and on the surface, she had a fantastic network, or at least, that's what she thought.
But here was the problem. Her portfolio was way too concentrated in one asset class, pure capital. I mean, she was surrounded by brilliant people at her same level, which was awesome for day-to-day stuff. But for her long-term career goals, it was a massive blind spot. So when she actually mapped out her social cap table, two huge gaps just jumped off the page. First, she had zero sponsor capital, someone way up the ladder who could drop her name in those high-level conversations she wasn't in. And second, she was missing devil's advocate capital, that crucial person totally outside her bubble who could challenge her ideas and tell her the hard truths.
So what did she do? Sarah didn't just network more. She networked smarter. She got strategic. She intentionally went out and invested her time in building exactly those two types of relationships. And the payoff? It was incredible. Within just 18 months, a new sponsor she'd cultivated went to bat for her, championing her for a C-suite role, a role that honestly would have been completely off her radar before.
Sarah's story is such a perfect example of why identifying these gaps is so powerful. So now let's get into the how. Let's talk about the framework for actually filling those gaps in a systematic way. This is your playbook for building a really solid, diversified portfolio. Okay, check this out. This matrix is basically your strategic plan for diversification. We've got 5 key relationship assets here. And notice, this is really important. Each one needs a totally different investment strategy. Like a mentor brings wisdom, right? So maybe you connect with them quarterly. But a protégé, they bring fresh perspectives. So your investment there is more about regular coaching and guidance. The big takeaway here is that one size does not fit all. You've got to be intentional.
But look, building a killer portfolio isn't just about adding new stuff.
Any great investor will tell you, you also have to know when to sell. And that brings us to our final and maybe most critical step, auditing your portfolio and, well, cutting out what's not working. We need to get real about what we call value drains. These are those relationships that, if you're being honest, just consistently leave you feeling drained. And let me be clear, this is not about being ruthless or cutting people off. It's about being a good steward of your own energy. You only have so much time and energy to go around. A value drain doesn't just suck up your time. It actively robs you of the capacity to invest in those relationships that actually lift you up.
So here's a super simple 3-step audit you can literally do today. First, categorize. Take your key relationships and slot them into those 5 asset classes we just talked about. Second, measure the ROI. And this is easy. Just ask yourself one simple question after you talk to someone. Do I feel more energized and smarter right now, or do I feel less? Be brutally honest. And then third, allocate. Based on your answer, you start reallocating your most precious resource, your time. Pour more into those high ROI relationships and gently, strategically pull back from the drains.
I mean, this quote just says it all, doesn't it? When you manage your social ecosystem with the same discipline you apply to your finances, you unlock a source of compound interest that no market correction can take away. Think about that. When you get this disciplined, you're not just networking anymore. You are building something powerful, something reliable, a source of value that is completely crash-proof.
And the ultimate payoff? You become truly anti-fragile. That's a powerful word. It means you don't just survive the tough times. You actually get stronger from them because you're supported by this incredible, diverse portfolio you've built on purpose. It completely reframes what networking is, right? It goes from being this awkward chore to being maybe the single most important investment you can ever make in yourself.
So I'll just leave you with this one last thought. You probably manage your financial portfolio pretty carefully, right? You track it, you rebalance it, you optimize it. My question is, are you giving that same level of care and attention to the portfolio that, when it comes right down to it, matters so much more?